Thank you, everybody, for being here today. So by show of hands, I have a question. How many of you are scared of dying? Yeah, I'm scared of dying. I mean, I've got an amazing wife, great kids. Life is amazing. Why would I want to let go of all this? But the thing is, what terrifies me even more than that is leaving my family in a financially vulnerable position if something were to happen. This is not just a pitch. I mean this. See, I don't know if it's an entrepreneur thing, but I have this recurring nightmare all the time. And it's a nightmare where I die and my family can't afford their mortgage or groceries or utilities or all those little things that our kids need to survive in this world. And I'll tell you, the world is becoming a very weird place. Things are changing. Things are scary. It's unfair. And our job as parents is not just to prepare our kids to live in this world, but to succeed in it, to conquer it. And success, in my opinion, comes from two things: stability and exposure. And both of those things, as parents will agree, cost a lot of money. So about a year and a half ago, I serendipitously had the opportunity to start working with AIM Financial. And I actually have the privilege of working with the founder and chairman. So like every other client that I work with, I sat down with him and I said, all right, tell me everything. What are you up to? What is it that you're trying to do? So he looks at me and he said, I am trying to find a way to help more Canadians get insured and protected in a fair, transparent, ethical, and cost-effective way. Now, to me, this is actually music to my ears. And here's why. So in 2016, Bank of Montreal actually did a study, a survey. And in this survey, there was two things that really stood out for me. So the first thing was that for every dollar that a Canadian in this sample earned, they were $1.60 in debt. And that's crazy. And if you're alive and you can service that debt, great. But what happens when you die? What's going to happen to your estate, to your family? Like, it's a lot of pressure. The second stat that really popped out at me was the fact that more than a third of the people in this survey were either underinsured or uninsured. And when they were probed as to why they were under or uninsured, they said they think the bank is ripping them off. They think that, or they don't trust a broker or an agent to give them the right information. They don't have time, they don't have knowledge, and they can't afford it. And that was also really weird to me because you've put yourself into this debt, this 1.6 to 1, and really and truly, can you afford not to? And see, that's the thing, right? Where do we prioritize? Where do we spend our money? So what we do at AIM is we basically look at all of those things, all those rebuttals, all those reasons why people don't like getting insured. We invest in research, development, and we reverse engineer traditional products so that we change the narrative and we give people more access. So I'll give you an example, and Selena was talking about it earlier. The first product we ever launched was 2020 mortgage life insurance. Now typically, I don't know how many of you know what mortgage life insurance is, but when you get your mortgage, you're in front of your banker, and they give you this second piece of paper and say, hey, listen, we're going to add a few extra bucks to your monthly payment, and if you die, we'll pay off your mortgage. Now, you've just made one of the biggest purchases of your life. So are you going to want that protection? You are. Great. Sign here. I feel better now. But when you actually take a magnifying glass and you look at that bank coverage, what you'll realize is that there are actual fundamental flaws in what they're providing. So, for example, with bank coverage, it's actually creditor insurance. So that means that if you die, the bank's loan gets paid off. Now, fair enough, your beneficiary gets the house. But what if that beneficiary doesn't want to pay off the loan? What if they want to use that money and keep making mortgage payments, right? The second thing is that if I get my mortgage when I'm 30 with this protection, I'm stuck to that lender. Because if at 35, I want to move to another bank, I can't take that coverage with me. So now I'm older. Older means higher risk, and higher risk means higher premiums. And finally, and the biggest thing over here, is the fact that you're basically in a situation where you can't pivot at all. There's these strings on you. So what we did with 2020 is we gave people this autonomy. We let them choose their own beneficiary. We gave them the ability to detach themselves from their lender. And on top of that, we were 25% cheaper on average because we didn't have all that huge overhead. Now, I'm not telling you guys to go and buy mortgage life insurance today. What I'm telling you is that you need to start thinking about protection. You need to start thinking about contingency plans. I have a friend. She died a few weeks ago. She was beautiful and smart and charming and outstanding, and she was 42, and she died of cancer. And she didn't know she was going to die. And she didn't think it was ever going to happen to her because she's invincible. We all are. We're all immortal. The thing is that death is not optional. But what is optional is how we go and the mechanisms we put in place and the legacy we create for our families. So, with all that, I want to thank you for listening to me today. I hope you enjoy the show. Have a good night.